Warren Buffett once said, "It is far better to buy a wonderful company at a fair price than a fair company at a wonderful price." Now, here's something interesting. There's a company in India that sells a product almost every person in the country uses every single day. But it's not a tech company, it's not an AI company, and it's definitely not a flashy startup. It's an innerwear company. Yes, I'm talking about Jockey. And the company behind Jockey in India is Page Industries. Now, here's where things get interesting. For almost 2 decades, this company has been one of the most successful consumer businesses in the Indian stock market. But recently, the stock has corrected almost 40% from its peak. So, the real question is, has something fundamentally changed in this business, or is this just a temporary slowdown in a very strong brand? Today, we are going to break down Page Industries as a business, how it actually makes money, what makes it special, and whether the long term story is still intact. Now, let's understand what Page Industries actually does. It is the exclusive license holder for the Jockey brand in India. This means it has the sole right to manufacture, distribute, and sell Jockey products across several regions, including India, Sri Lanka, Bangladesh, Nepal, and the Middle East. In simple terms, if you see a Jockey product in India, it is almost certainly being manufactured or distributed by Page Industries. And that license agreement has been the foundation of this company's entire business model. Now, the company also holds the license for Speedo Swimwear in India, which is another global recognized brand. So, Page Industries essentially operates as a brand driven apparel manufacturer and distributor. Now, the real story of Page Industries is actually the story of how Jockey transformed the innerwear market in India. Because if you go back 20 25 years, the Indian innerwear market was mostly unorganized. Most people bought cheap local products, low quality products, unbranded clothing. There was very little brand loyalty. Jockey changed that completely. Instead of competing on price, Jockey focused on comfort, premium quality, and brand perception. And slowly, the brand became associated with trust and reliability. Today, for many consumers, Jockey is almost a default choice when buying innerwear. And that's a powerful position for any brand. Now, the company is not just relying on basic innerwear anymore. The company has been expanding into multiple new categories. For example, athleisure wear, sportswear, loungewear, women's innerwear. This is important because consumer fashion trends are continuously changing. Today, people want clothing that is comfortable, stylish, and versatile. Athleisure clothing you can wear both casually and for workouts is becoming a huge global trend, and Page Industries is positioning Jockey to benefit from that shift. So, now that we understand how the business actually works, let's take a look at the financial performance. So, right now, the company's market capitalization is 35,000 crore rupees, and the stock is trading at around 31,500 per share. Now, the first thing most investors will look at it is the PE ratio. Currently, the stock is trading at a PE of around 45.5. Now, at first glance, that might look expensive, but if we go down and see its historical valuation, things start to look a little different. So if you look at the last 5 years PE, median PE, it has been around 78, and if you extend the time frame to the last 10 years, the average PE has been 73. So compared to its own history, the stock is actually trading at a much lower valuation multiple today. In simple terms, the market used to value this company at a much higher premium than it currently does. Now, if we go up, uh, the company has a return on capital employed at around 60% and the return on equity at around 48.5%. These are exceptionally high numbers. Very few companies are able to maintain this kind of capital efficiency for such a long period of time. And it basically tells us one thing: this is a very high quality business model. Now, if we scroll down at the quarterly performance, we can see that the business is still growing. Revenue in the current quarter has increased from 1200 crores to about 1387 crores. And the net profit if has also increased. So it was 124 crores to about 190 crores in the recent quarter. So clearly, despite the correction in the stock price, the underlying business is still expanding. Another interesting thing to look at it is the operating margin. So if we compare the numbers from December 2022, operating margins were around 16%. Today, those margins have improved to 23%. That's a significant improvement in profitability, and it indicates that the company has been able to maintain pricing power while managing cost efficiently. Now let's zoom out and look at the long-term growth story. So if you open the profit and loss statement, the growth over the last decade is actually quite impressive. Back in 2014, the company's revenue was around 11188 crores. Today, the number has grown to more than 5000 crores. So the revenue has increased almost five times over the last decade. And if you look at its net profitability, it has grown from 154 crores to nearly 749 crores today. That kind of consistent growth is one of the reasons why Page Industries has historically been considered a high quality consumer business. Now, let's quickly look at the balance sheet. And if we go down, this is another area where the company looks quite strong. So if we look at its reserves, they have grown from 278 crores in 2014 to about 1400 crores today. At the same time, the company has kept borrowings relatively low at around 268 crores. So if we compare that with the cash and cash equivalents, you will see that the company has a cash of around 507 crores. So effectively, the company has more cash than debt, which means the balance sheet is quite healthy. For a consumer company, this kind of financial discipline is always a positive sign. Now let's take a look at some of the operational matrices. Now, one interesting point is the employee headcount. If we go down and see, in March 2022, company had around 27,730 employees. Today, the number has reduced slightly to about 21,500 employees. At the same time, the company has actually expanded its retail presence. For example, exclusive brand stores have increased from 1157 stores to about 1556 stores. Multi-brand outlets have also increased from 1.1 lakh outlets to 1.13 lakhs outlet. So even while optimizing its workforce, the company has continued to expand its distribution network. Production capacity has also remained stable at around 260 million, from 260 million pieces to current 280 million pieces. And the sales volume has also increased from 175 million pieces to 197 million pieces now. Finally, let's take a look at the shareholding pattern. The promoter holding has remained stable, if you see here, and overall the shareholding structure hasn't changed significantly recently. But if we look at the institutional investors, we can see some interesting movements. So foreign FIIs have had around 22% in December 24. This increased to about 24% in June 25 and has recently declined slightly to around 21%. Meanwhile, DIIs, they were around 28% and they are now up to around 30-31%. So public shareholding also remains quite small. It is almost around 4 to 5%. And usually when a large portion of the company is held by institutions and long-term investors, it suggests that the stock is largely in strong hands. So overall, when you look at the financials of Page Industries, three things really stand out. First, very strong profitability matrices. Second, consistent long-term revenue and profit growth. And third, a very healthy balance sheet with a low debt. Now that we have looked at the business and the financials, the next question investors usually ask is, what does the chart tell us about this stock? So let's now take a look at the technical picture of it. So now let's take a look at the technical picture of Page Industries. So if I zoom out and if you look at the chart here, you can see that the stock actually peaked around October 2022, reaching levels of close to 53,500. From that point, the stock has corrected significantly. At the current price levels of around 31,500, the stock is down roughly 41% from its peak. Now, if the stock were to eventually return to its previous high, there is a just yeah, so that would represent a potential upside of almost 70% from here. But here's the important question investors should ask: is this the first time Page Industries has corrected this much? And the answer is no. If we look closely at the historical price action, the stock has actually shown similar correction patterns multiple times in the past. For example, after hitting the October 2022 highs, the stock over corrected nearly 40%, reaching its lows at around March 24. If you see here, it is March 24 when it touch is low. After that correction, the stock again bounced back significantly and moved close to 50,000's level before correcting again to the current range. So these large corrections are not unusual for this stock. So if we go to further back in time, back in August 2018, the stock was trading at around 35,800 levels. And from there, between August 2018 and April 2020, the stock corrected by almost 55%. That period also included the COVID market crash, which affected most stocks globally. But what is interesting is that the major correction, the stock eventually recovered and went on to make new highs later on. So historically, Page Industries has often moved in cycles. The stock tends to rally strongly for a few years, then go through a deep correction or consolidation phase, and then eventually continue its long term growth. And that is something investors should always remember with high quality consumer businesses. The underlying businesses may continue to grow steadily, but the stock price can still go through large corrections along the way. So when we put everything together, we have a company with a very strong brand in Jockey, consistent long-term revenue and profit growth, excellent profitability metrics, and a healthy balance sheet. But at the same time, the stock has corrected significantly from its peak. Now, whether this correction turns out to be a long-term opportunity or just a period of consolidation, that's something every investor has to evaluate based on their own investment strategy and obviously time horizon. Because at the end of the day, even great companies can go through periods where the stock price moves sideways or correct sharply. If you find this analysis helpful, make sure to like the video. And if you enjoy deep dive into the companies, markets, and investing ideas, consider subscribing the channel. It really helps the channel grow and allows me to bring more such content. Also, let me know in the comments which company you would like me to analyze next. Thank you for watching, and I'll see you in the next video.